Hello traders, Gary Wagner here, approximately 12 noon in Honolulu, 6 o'clock in New York City. It is Wednesday, the 20th day of June, 2012, and this is the daily report for gold and silver. We do have the precious metals lower today, this following the conclusion of the FOMC meeting and a conference held by Fed Chairman Ben Bernanke. Currently, we are off the lows, but we are down approximately $11 in gold, trading at 1607. That is the ask. 1606.80 is the bid. We have silver off about 30 cents today, trading at 28.22, low 27.60, high 28.76. It is my belief that the precious metals markets, to a great extent, factored in the belief that this FOMC meeting would bring about some sort of news that would indicate a furthering of monetary policy and easing of that monetary policy. And we did hear commitments from the Fed chairman that they were able and prepared to create more steps if needed, but that in essence those steps are on hold or are not needed now. And because of that, as I said, I believe they had already factored that into the market. So we're seeing that premium come out. And therefore, we saw this market under some great pressure. Now, it's well off the lows. The lows were around, I believe, 1585. And it's just that type of volatility that prompted me yesterday in my opening letter to suggest exiting our current trades with a push, slight loss, slight profit, but a push nonetheless. We're looking at a daily chart, cash gold. We're going to look at an intraday chart also so we can really see the activity. But I want to bring to your attention the fact that on a daily basis, we have, I believe, pretty strong resistance right at 1624. You can see this on a technical basis. It is a Fibonacci retracement point. I'll condense the chart so I can show you where it begins from and what we're using as our data points. But as you can see, support and resistance, we talk about this all the time, are one in the same. Here we see this number, call it 1620, 1625, being good support. You can also see that on that break from support, you had a pretty strong market in terms of a downtrend until it found really absolute supports right at 1533. Now, both of these, as I said, are Fibonacci retracement points. And in terms of where I'm actually plotting this from, let me go ahead and shrink this chart up a little bit so you can see. I am looking at a longer term Fibonacci retracement. And in this case, this is a point, the market from about 1150 to its absolute top, call it 1920. And as you can see, these two different levels that we're looking at, our 50% level and our 38% level, seem to be in play in terms of having importance in the market. And in terms of historical references, we've talked about this series of bottoms here. We've talked about it infinitum. And I do believe that we have very, very good support in that area. And that's on the upside, of course. But at the same time, although we have real good support in this area, we absolutely now have some real resistance right at the 1625 mark. We also have one wild card in there, and that is a psychological level more than a historical level. And when I say historical, simply what I am referring to is something that has a technical data point, and that would be straight $1,600. All of what I call the century marks are psychologically important marks as the market goes through, either to the upside or to the downside. As you can see, it flirted with that area today, but as of right now, 1606, it is on a tenuous basis above that point. To me, it's very, very critical that it hold that level, because if it does not, we really don't have any real support until we go back to, as I said, 1530 area. So my sentiment right now is we want to be guarded as we look at this market trade. I think that the scenarios in the marketplace right now, whether it be the European Union, because that is still going to be on a front burner, or the G20 meeting, which is scheduled to come up very soon, will continue, I believe, to have a genuine impact on the precious metals market. We are looking at a 60-minute candlestick chart. The reason for me putting this up, typically I look at, as you know, a lot more long-term studies. But I really wanted to illustrate the kind of volatility that we saw within a few hour period. You can see these are not mystics. These are actual lows that we got in the market here, a high here. So in a period of 1, 2, 3 hours in time, right during the FOMC meeting conclusion and the time in between Federal Chairman Ben Bernanke came and answered questions from reporters, you can see this type of volatility in the market is pretty extreme. And it really becomes apparent when we take it to a real short-term chart. This, of course, is a 10-minute candlestick chart. And you can see the market reacting, coming down near the lows in a 30-minute, 3 bars time period. It moves back up to the highs, meanders in this area, and then, of course, currently, as it's now digested the primary bulk of what was said at the FOMC meeting and the conference following, you can see that it's gone into a very, very quiet and narrow trading range. Traders, we are looking at a 420-minute chart. This is of silver in Henkin Ashi format. And of course, we've been talking about the resistance area in gold primarily, but you can really see this strong level of resistance here, 29.50, unable to take it out. We, of course, have this triple bottom, 26.14. And right now, we are also at a, not a century mark, we'll call it a decade mark, but 28.06. Will the market be able to hold that particular area? My sentiment is if we see pressure on gold and the fact that we have slowing economies, we probably will see silver fall with it and possibly fall harder percentage-wise than we see gold. Well, where could it head to? Well, the point that I would look for really is right around 27.50. That's these particular bottoms right in here. And I think that there's good support there. We really don't have any real resistance till about 29.50. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.